This is going to be the token platform providers, and I think we've really touched on what these guys do in a number of places, but now we get to hear from them actually. So we've talked a lot about your role. We haven't talked a lot to people within your role. So hopefully that'll get addressed today. And with that, I'm going to pass it to Mark. Take it away.
Thanks, Pierre. So we do have a great panel and a very timely subject. There's a lot, as we have been hearing all day and happening in the token space. I've written about it for SiliconANGLE and theCUBE, our two primary media outlets. And why don't we just go ahead and kick things off by having you each introduce yourselves and take a couple of minutes to just tell us briefly your role in the token world. Mason, why don't you go first?
All right, so my name is Mason. I'm with TokenSoft, and basically we have a issuance platform that helps startups, enterprises, funds tokenize, and to do so while remaining within their compliance requirements, whether that's from a US perspective or globally. The compliance requirements we're helping them enforce are sort of banking, securities, and tax, and we do that during issuance as well as post-issuance.
Cool. And I'm Jamie Finn, co-founder and president of Securitize. Essentially, we offer primary issuance, and then we manage compliant trading on the blockchain. We have a protocol which we released called the Digital Securities Protocol, which is being adopted by a number of these secondary market exchanges so that trading can happen in a way as described by Bart.
Hi, my name is Mike Zyko. I'm the head of sales at CoinList, and like my two colleagues here, also a primary issuance platform and token distribution platform. I consider myself lucky because I get to spend all day talking to various teams within the space, introducing them to our platform and also advising them on the various modes for fundraising within this ecosystem.
David Streltsov, I run sales for AmbiSafe. We're basically a blockchain engineering firm, so we do everything from strategy to tokenization to storage, and now we just launched a decentralized exchange.
Okay, great. So I want to dive into this just very briefly at the top here, which is value. So you have clients, you have customers, they have expectations. What is it you look to deliver to meet those needs? What is the kind of the value proposition that you're talking about?
Yeah, so there's a couple elements of it. I guess I'll talk first about like what sort of pillars we started the company on. We sort of saw these issuance, there were a few issuance platforms when we started. What we really wanted to bring to the market was basically stability, compliance, and security. So we help people get through that process while focusing on those three things. And so in terms of compliance, we really, we help issuers enforce compliance requirements in every jurisdiction that they're offering in. And so that's one of the things we bring. We have a huge emphasis on security. We're a security-first firm, and so everything we do is with that in mind. And we're just trying to get issuers through the process in a very streamlined and low-stress manner. So that's why we sort of focused on those things.
You want to go down the line? All right. Yeah, I mean, so I think our businesses started in different ways, right? So we started by actually running trying to find a platform to run a security token offering on, which was a fully tokenized VC fund called Spice VC. We couldn't find a platform, so we ended up building one to kind of meet the requirements. And then from there, we've been extending our product based on the customers we have and the demands they have. So we're very much driven by the conversations we're having with customers and the problems they have. And I'll say, you know, there's a lot of folks out there that are looking at the space and be like, oh, I'll just grab this thing off the shelf and use it. But that may work for the initial pieces, but when you get to the edges, it gets really, really complex. And so that's where we end up spending a lot of time. In fact, yesterday I was on a panel where someone was talking about how they lost half the value of their investment because they didn't have a way to trade the ETH that they got for cash. They didn't have any OTC setup. So that's an example of little details that can end up costing you a lot of money if you don't do them the right way.
There are a number of requirements that teams face when they go out and looking for a issuance platform, and it probably ranges depending on the spectrum of where they sit. So we look at it as on one side, they could be a more traditional asset like real estate, and then the other end, a more crypto-forward protocol token. And the requirements of each of those sides can be quite different in the value that any issuance platform can bring to the table. It's very hard to be good at everything, so we try to focus on a couple at CoinList, and in this case, it's really on the marketing piece, so helping to drive capital into the sale. So we have a large network of accredited investors on the platform, and then also on the compliance and security side. And in that case, it's almost like being an NFL kicker. People expect you to hit the extra point, but you have to get all of the compliance requirements right. They don't. It's table stakes for them that everything goes smoothly there, but driving capital into the sale is really one of the key things that they're looking for.
And I'll complement to that. For us, value is really from the beginning. So not every project's a good one. So we see a ton of white papers. We have to turn a lot down. Do you have a team? Are they real? Have you made a penny? Is it just an idea? Do you come out from that point on? Let's say you do have a team. Then we look through, KYC, AML, where are you domiciled, all that different stuff down the road. And then we sort of move through that. So value runs all the way through. We're currently really focused on our exchange, so that secondary market. So like Bart said earlier, how do you actually get value from it? Can you make value from it? Can you actually get dollars from it? So that's really what we're focused on now.
So David, you touched on an interesting point, which is there's a certain amount of due diligence that I'm sure you all do when you're talking to these clients. And so I have to ask, have you ever turned down a token or advised them, this probably isn't a good idea right now? I mean, how does that work in your world?
Unfortunately, we have to turn down nearly 90% of the projects that we see. But the good thing is we have over 75% success ratio because of it. And part of it is really because, like we said, not every project's a good one. Last year was a different year, and I'm sure the other panelists would agree that so much came through the door. Everyone wanted to raise money. Not every project actually had a viable business proposition. So we really take a look at it, take a look at where they're domiciled. It's really a lot on the KYC AML, the lawyers, and what they can pass and things of that nature.
We've had about 2,600 projects come through the door, and in terms of a main sale on CoinList, we've only listed 5, so we definitely keep a very high quality bar, and we've also done a number of private sales on the platform. In many cases, if those private sales can execute, that's a quality bar in the sense they can round up investors to make a sale happen, but I definitely think in a number of conversations, we're starting to question, is a token necessary? Do you need to do a token sale in order to drive this business forward? And you'd see more instances of teams deciding, well, maybe we're gonna do an equity fundraise or another security token that's different than what they might have done 6 months ago. And part of that's driven by what the investors in these sales are expecting and the governance that they want or expect in coming to these sales versus strictly a equity play versus a token.
I'll take both. I think we all see them, right? So we get 25 plus submissions a day from different companies. Definitely there's volumes of them that make a lot of sense and are really interesting projects, but I mean, realistically, we can't support hundreds of projects ourselves, right? So we have to work through the good projects and as this thing matures, you start to see better and better deals. We're starting to see more advanced kind of financial products, which are really interesting. Not just straight equity. Straight equity is great. It's very simple, very straightforward to do. But we're starting to see more advanced type of financial products, which are buyable by a global audience, which I think is really interesting.
So I think maybe it's every day, maybe it's every other day. I find myself trying to talk a company out of doing a token sale, and you kind of need, I guess, 2 fundamentals to look at it at a very high level. One, there has to be a need, and 2, they have to have the vision and they have to want to execute on this and to bring it through, because the market's generally still very young and a lot of people are still figuring it out. And you may really want to do a sale, but there's a lot of different pieces you have to bring together just because the market's young to make that successful. So I think there's the industry still has to probably mature maybe another 3 to 5 years before this becomes a very streamlined process and people can get through it a little more seamlessly. But for now, I think it has to be the right project and the right types of founders that are going through this process to make it actually happen.
Okay, so there's a certain percentage you accept, and they're launched, and you shepherd them through the process. So what are the benchmarks for determining then that this was successful? I mean, how do you or how do they decide, hey, this worked really well, or boy, this didn't? I mean, what are the benchmarks? How do you know that this actually was a successful effort?
I can jump in on that. I mean, I think everybody measures it by the amount of capital raised at the end of the day. There are, in the space we're in, at least, folks are coming to us specifically to find investors and raise money. Since we don't actually participate in that business, folks like CoinList do a great job and broker-dealers do a great job raising the capital, but that's what they see as success, and that's what they're starting to care about the most right now. So if they can't raise the money, then who cares about the platform doing it?
And that dollar amount is probably what's getting a lot of the headlines. One of the things that we look at with the teams we're talking to, especially as people are trying to provide decentralization of investment opportunities, is how many people actually invested in the sale, not just the total dollars raised, because you could have gotten a couple of big checks and then only a couple of small investors, but teams we're working with, they want a wide breadth of investors or purchasers of their token in order to have that strong advocacy group, people talking about it and advocating it and developing on it.
I agree. It's outside of the dollar amount. It's really the industry involvement and customer engagement. So, we certainly take a look at that and seeing the viability of the product as a whole.
Yeah, I think everyone has different business goals when they look to tokenize, and so one of those metrics is hitting a certain price target when you're raising. But if these things are to be investments, I think it's also important to make sure that this is a good investment post sale, and I think that's something that'll maybe take a little bit longer to figure out, and that's maybe a little bit harder to execute on than the actual sale itself.
So earlier today, one of the panelists talked about how she had read a report showing kind of something, I think she quoted 90% slowdown in the last year over year in token sales. Some research that I looked into, so the capital raised from ICOs hit a 16-month low in August, barely 2 months ago. So I'm just curious, from your perspective, what does the market look like for you? I assume you've seen a slowdown in your business, maybe not, but what's the market like right now? What are you seeing, and do these numbers sound right to you?
I'll jump in. Sure, we've seen a massive slowdown from last year, but really the good projects are coming through. So we're seeing that the teams are a little bit well-formed, the white papers are done. They've actually seen it in the wild, and just the whole process is a little bit more seamless. So the stuff that is coming on our desks is still large, but we're turning down a lot more. But overall, the projects that are coming through that are asking for that know a little bit more about what they're looking for.
I'd echo that sentiment. We're definitely seeing a slowdown in probably those long tail type of projects, ones that were probably questionable if they should have been raising money to begin with. So that's slowing down a bit, but I think Bart mentioned earlier, a lot of people within the Bay Area leaving companies like Google and Facebook, going out and trying to start companies. So we're seeing that quality bar remain pretty high in the teams that are coming to us. And the other, I think, factor for all of us sitting up here is that a lot of those sales that you see out, whether 2000, were never ones that we were actually probably going to touch, because in many cases they were probably doing an illegal securities offering, or they were blocking U.S. investors. They might have just been doing something that we would have not been able to engage with them on. So that disclaimer at the bottom of the token sale opportunity, where it says, we're blocking all these countries, it just might have prevented us from ever working with them to begin with. Whereas you see more sales actually moving into the private market and just raising from institutional, high net worth individuals, angel investors, et cetera.
Yeah, I mean, I would agree. Yeah, we've got, I think, 18 or so deals up and running right now. And the bulk of the money that we've seen, deals that are bringing in $50, $60, $70 million. And then, we've seen deals that are struggling to get their kind of initial traction. And so it's down to the quality of the deal, but it's also down to how the brand of the company and how relevant they are really matter in this space. And so this is a place where more mature companies are much more successful, particularly with the track records. If you have a good track record, you have a good brand, this is a really good space for you. If you don't have that yet, it's probably not the best space. An equity round is probably a really good idea to start with, and then move to a more of a broader offering. And everyone's waiting for the exchanges to come out in marketplaces. There's a whole, right now you can't trade these things anywhere. There's a bunch that are supposed to launch imminently, and when they do, I think it'll bring a lot more capital to these different offerings. Right now, that's not there yet, and we're probably a couple months away still.
Yeah, so these started trickling in informally in 2015. I think there was maybe one or two a month And we really saw the surge in 2017. And it seemed like every day there was maybe 5 or 10 of these sales. And at some point, it literally became anyone putting up a website with a Bitcoin address and trying to fundraise. And through November 2017, there's about $3.7 billion raised, and it was a very noisy market. So since the SEC has come out and they've said more things, and people are starting to pay attention to them, people are starting to think a little bit more about doing these. And so a lot of that noise and a lot of those projects sort of went away. So I think what we're seeing now is more of the market maturing versus the market slowing down. And so we may have less and less projects doing these every month, but at the same time, we are seeing just higher quality teams, higher quality companies, larger and larger companies looking at entering the space and doing a security token offering. And so I think of it more of as a maturing of the market.
Jamie, you made an interesting point about exchanges, and one of the panels that we had earlier this morning talked about the rise of decentralized exchanges, and obviously in some competition with the centralized one. Binance is getting ready, one of the largest of the centralized is getting ready to put a decentralized exchange into beta in the early part of next year. So my question is, how do you see that playing out in terms of, its impact on your business, and what's your interpretation of the exchange landscape right now?
Yeah, I mean, we've been working on integrations with both centralized and decentralized exchanges, and it's a very stark a comparison, right? So an American centralized exchange kind of looks at it under Rule 12G. They're like, we're going to control it in-house. We're one entity. Then a lot of the pieces of technology you don't get to take advantage of. Other folks like Open Finance or AirSwap are doing a decentralized marketplace, which is totally different. Really interesting approach. That's really energizing to me. I love that type of approach and what they're doing, because it takes advantage of all the things that can be done in terms of the regulatory environment. And then in terms of me being able to own my securities and being able to trade my securities without having to send them to some middle person who I don't know, which is not the point of what we're doing here. So for me, the long-term, the decentralized stuff really, really works. Figuring out the order books, figuring out how to drive liquidity in that is really, really hard and hasn't been cracked yet. But I think that's a problem for the security token ecosystem overall, is liquidity. It's one of the biggest questions we get is, oh, great, we can list it, but is anyone going to come and buy these things?
And that's exactly the problem that we're having too with our decentralized exchange. So I come from the Citadels of the world, and we built a dark pool and all those things, and we're fighting through institutionalization of our exchange. So what that simply means: simplicity, transparency, roll up your order at a certain point. Obviously, we're a 24-hour system. Do you have to peg at a certain time? How do you do, in terms of transparency? Do you do a NASDAQ smart systems, trade regulations, all those things? So institutionally, it makes more sense. Outside of that, it's really speed. So if I could get done faster at a centralized exchange and a Binance, how many people care? That's what we're trying to struggle through and figure out.
I think number one, I think we have enough exchanges. But number two, I think so with the centralized exchanges versus the decentralized exchanges, I think it's more of an experimentation with the tech than it is anything else. A lot of people think of it as a way to get around regulations, but the people that own the domains and operate as an entity that are managing those decentralized exchanges still have obligations to follow those regulations, and perhaps as they scale to a large enough size that it'll become more and more common, they'll have to package themselves a little bit like the centralized exchanges in terms of compliance requirements. I don't see them having any effect on the market. I think it's just more and more experimentation, more places to trade these things, but I don't think it'll have a huge impact.
So, Mike, I think at one point you mentioned branding, and how many people are soccer fans in here? I'm just curious. Yeah, we have a few. Okay, good. So, as some of you might know, Juventus, the soccer club, recently announced that it would launch a blockchain-based fan token. So, obviously we've got a lot of different industries, a lot of different brands, so to speak, moving into this space. So for the panel, what are you seeing in terms of industries, brands who are migrating here, and perhaps in some cases, like a soccer club, someone that might not necessarily think of in terms of getting into this field?
Yeah, this is an interesting example because I think in the sports and media space, there's a lot of potential applications that we haven't fully explored yet. And again, this is definitely experimentation phase. So on the one side, you have more of your marketing / community engagement, fan engagement. I think recently Los Angeles Dodgers had a non-fungible token. And you can imagine a world where people are trading these like playing cards. And humans just enjoy that sort of thing. They like to know that this is the one entity of that, and potentially they can gain some traction. I think on the other side, within sports and media, that there's a lot of interesting opportunity is on the fundraising side. So you hear more about cities saying, we're not going to fund your stadium anymore. We're not going to fund you millionaires to play this game. But fans want the stadium. They want their team to stay locally. So is there a way to introduce a token for a team? You look at someone like the Green Bay Packers who actually offer shares of ownership. Now, the shares of ownership don't really mean anything in the case of the Green Bay Packers, but you could imagine a world where you want to expand your stadium and add 5,000 seats. We're going to sell the tokens for that, and potentially you can have access to either certain governance mechanisms or even potentially revenue streams. So I think there's a lot of new things that we can explore within the sports and media world.
That's a great point. You know, we're seeing a lot more on the tokenization side, not necessarily the ICO side, in-game purchases, healthcare, infrastructure. So those are the deals that are coming to our desks. We're not recommending, to your last question, that everyone do an ICO, but the tokenization and the sharing internal of the existing applications that are already making money is something that we're really growing.
Yeah, I'll be honest, I don't get the Juventus thing. It doesn't make any sense to me. There's nothing tied to it. I can definitely see a scenario, and we've been approached by clubs that want to build new stadiums and they want to raise. I think that's a great example, and I think it's real. I think a lot of these ideas are just half-baked. I mean, there's nothing in that that's appealing to me as an investor. What am I buying? What do I get with it? What's the value? What possible returns could I see? None of that is in any of that marketing pitch that they made. They have a great brand, and so it'll be a shame if they end up squandering it.
Yeah, I think 2017 just drew a lot of attention to the space because of the cryptocurrency market and the prices, and it sort of just captured the imagination of a lot of people, whether they work at soccer clubs or they work at large financial institutions. And I think this is just the residual effects of that. It's just people trying to experiment with these things and see what's possible. We also saw the Kings, the Sacramento Kings. They are now mining. I think they're mining Bitcoin, if I remember correctly, and they're donating the money that they get from that to a scholarship fund. And I think this experimentation is good, and people are just going to get more and more familiar with technology. And in the long run, that'll just make it more and more mainstream, which is, I think, all of our end goal for the space.
Well, okay, so you outlined pretty well, some of the different use cases that we've seen out there. Obviously, this has contributed to the kind of regulatory cloud that has kind of hung over a lot of this space for a while. We've had a lot of discussion already today about regulation, but I have to ask you, because you're kind of in the front lines, you're kind of being whipsawed, I think, a little bit by this, at least in terms of what the SEC may or may not be doing in this area. So what is your take on this right now? Is this kind of a big boat anchor, dragging down your business? And if so, what would you like to see changed?
To be honest, I'm grateful for regulation, because without it, we'd have all sorts of unregulated ICOs out there today, and our product really wouldn't make a lot of sense, right? And so, if somebody, and I think it'd be great if we could get some more clarity. I don't think the regulations in the US, which are the main restrictive one, are all that bad. I think the limits on the caps on the amount of investors is really the biggest one. I joked on our Twitter feed yesterday, we just exceeded like 2,000 Twitter followers. So it was like, now we just broke the Reg D rules. In terms of how many people we could have. It just doesn't make sense in this day and age, and I think that's where the innovation needs to happen in the US. Internationally, the rules are actually really good, and they work. I mean, we've worked in about 25 countries thus far, and it's very clear, it's easy to understand, and you have to abide by their laws, but that's the piece, is pay attention to everybody's rules, not just the US. The US is one piece, and whilst I sound super American, our business was founded in Europe, and so we didn't start with an American point of view. So we spent a lot more time kind of understanding the world, and then now we're here in the US as well.
I think regulatory uncertainty is certainly something that slows teams down because there's just one more item that they have to think about and deal with. Our expectation is, based on what we're seeing, is hopefully once we get some clarity that we will move in the right direction. The SEC, a lot of the speeches that have been made, whether it's by Commissioner Clayton or Bill Hinman, have been generally positive. You have the Safe Harbor group that's trying to develop, and so I think we're headed maybe in the right direction, although it's just taking us a little bit longer to get there.
Yeah. So I followed the space for a while. I set up the wallet for the first Ethereum-based ICO in August of 2015, and I just sort of watched all these ICOs come through, and it's very informal. They put up a Bitcoin address on a website, and then somehow money comes in, and it wasn't until the summer of 2017 when we saw. Number one, people with reputations start to do ICOs, which meant they were going to just do a lot more diligence when they're going through the process. So Blockchain Capital was the first fund to do an ICO, a regulated ICO, and we also saw major law firms enter the space and try to figure out how to interpret the laws around these ICOs. And so they figured out that these were essentially securities offerings, and so they had to follow securities laws. And so when we started, our clients not only needed to follow, the regulations in the U.S., but also in every country that they were issuing. And so we started making all these very interesting bespoke compliance requirements per country. And I think the complexity, so as a company, the complexity is something we sort of like, just because we can be very adaptable. But I think they have been since late summer of 2017, I think the regulations have been clear enough for companies to comfortably launch in the space. It's just a matter of doing enough diligence to figure out what those requirements are and then packaging yourself as an entity into those requirements at issuance.
I'll echo Jamie's sentiments. Regulation's good. Right now, it's a bit of a guessing game. So in 6 months, things could be entirely different. We see that our business is really going overseas. So we're global, and we see a lot more coming from Europe, Switzerland, Hong Kong than the U.S. We get a lot of interest from the U.S., but is it a security? Is it a utility? As we all know, a lot of it is coming down to the security pipeline and then accreditation and all that. So we're just trying to figure it out. And I tell my team, really, just we have to wait till there's a line in the sand. And as of right now, it's just a moving target.
Okay, so I'm going to open up the floor here to questions for our panel. I think they've done a good job of handling some of mine, but I know there's probably a few out in the audience as well. So question right here. We'll start over here.
Do you see your platforms being used to mimic and replicate the asset securitization markets with less complexity? In other words, I used to do asset securitization, take $100 million, $500 million worth of assets, put it into a trust, issue securities, highly complicated, regulated process. I have a vision that the smart contracts could replace trustees, custodians, and so forth. Do you see yourself targeting that market of assets as opposed to shares of stocks in a company?
I mean, I'll speak for us, absolutely. I mean, you can look at our business very much as taking the 6 different layers that exist in the market and kind of compressing it really very far down to just really 2 parties, kind of the company that's issuing or the asset that's being issued and the investor. And in between, you're going to have some sort of transfer agent that's going to manage the transactions. It's using old nomenclatures from kind of historical things, but that's very much what we see. The clearinghouses, all these things go away. And so you'll have a lot more fluidity in terms of executing it. So I absolutely seeing much more complex products. Without a doubt, that's the next phase of where this business goes.
Yeah, I think so if you look at traditional markets, there's just, with the broker-dealer structure, there's just layers of middlemen and different components that fit in there. I think what's been interesting for me, and this happened organically, is we've sort of seen a more issuer-centric model. So if you think like Bitcoin is great because it's a very peer-to-peer model, and we're seeing a lot of those elements that were fundamental in the technology sort of appear in this layer that we're building here. And so it's a much more issuer-centric model. It's peer-to-peer with their purchasers. The issuer now holds a lot more liability as a result with what happens with their token at issuance as well as during trading. But I think that's sort of the beauty of it. It's sort of organically moving in a more peer-to-peer direction. I think that's really interesting.
Yeah, I'd just be curious to hear a little bit about just like, I guess, the level of templatization you guys have been able to achieve, maybe like versus a year ago, versus today, versus where you think you are a year from now. Just, I guess, specific to primary issuances, like how much do you guys have to tailor to each specific industry or use case versus like how much is the process being streamlined?
For us, it's, I'd say, and this is rough, so, most of our projects that come in that we accept have some sort of templates going on with them. We don't take a ton of customized work right now simply with the fact that we just don't have the bandwidth to accept them. But it has, in the past, we've taken a lot more, especially with the smart contracts and different use cases. We talked about real estate and things of that nature. So we're taking a little bit less, but it's been about, let's say, 80%.
Yeah, I mean, I'd say my dev team would. I think we're selling the kind of same thing over and over, and my dev team would disagree with me. I think in the nuance is really in the execution, and like when you get down to the finite detail with the customer, there's, we probably have 12 different smart contracts that we've developed, which, we've done equity 4 times. Why do we have 12? Well, there's different vesting schedules. There's different like nuances to different things that we do. And so that's where it gets a little bit more complicated. I think in long term, you'll have, these primitives will be developed, and then you'll have these financial primitives as standard kind of contracts, but it's going to take a few weeks.
Yes, so follow-up question to what he said. And your answer was, you compress the layers with the smart contract, and you've got fewer entities in between. Did anybody try that with just a regular database? And has that instead of like leveraging smart contracts and blockchain, do you know of it? Like if people tried it, because blockchain is not essential to make that happen. You could do it with a database. It's like the entities around the table, they need to agree that that's the digital asset that they'll be looking at. You could do it with databases and APIs. So, I'm just curious if anybody tried it.
When was the last time you had like a meeting with like 20 people and you all agreed on the exact same thing and the exact same thing happened? It just doesn't, it sounds great. And yeah, maybe you could do it if you have very limited counterparties. But when you have a bunch of people that all have different agendas, you're invariably going to need a single source of truth. And that's what you get here. And it's just, in that way, it's better and it's a lot simpler than trying to like this thing is there. I personally don't believe so much in private blockchains, which are databases for the most part. Public blockchains make a lot of sense to me. And that's just, where our business is. If you don't want to do that, you can do databases.
No, I guess no, I'm all for it. The reason I'm asking this is, is that compelling enough for those parties to come and sit at the table? Is that, listen, now we have this technology where, because the whole securitization thing, it's been there for a very long time.
Yeah, but it's not I think what the gap, at least we see, is the marketplaces and the exchanges, right? So yes, I agree. If you're never going to trade this thing, absolutely it doesn't make any sense. If you want to trade it, and you want some other advantages that are there, this starts to make a lot of sense and is a really good way to manage it. Again, there's the big stock markets, which are another really great way, but it's a very expensive process there. So this is significantly more cost efficient as compared to going full public offering.
And what do the investment banks have to say about it? Like, because this is kind of taking a bite out of their apple. So
I think it's a little early. So they've been poking around, but I think it's still a little bit early. I think everyone's still in the experimentation stage. So is it a compelling enough technology for people to actually do this versus a traditional issuance? I think the people that are interested in it are still interested in it for the novelty more so, and seeing what's possible and seeing how much they can do with it, than this being a one-to-one replacement. So I think the investment banks we see in the headlines that they're still like poking around and they're trying different things, but I think it's still an experimentation stage for them.
Thank you.
Okay, I think this will be the last question. Go ahead.
Great, thanks. Just wondering what you've seen in terms of tokenization of real estate projects.
I mean, we've seen Really Coin, which is a venture fund. So we've seen a few funds. We've seen single-family homes in Atlanta tokenizing the whole property and selling off the revenue streams around that. So those are the types of transactions we've seen thus far. There's been some other things that haven't worked out. These are the ones that I actually see going out to market today. I think we're going to, for me, if you're just going to tokenize a REIT, it doesn't really make a lot of sense. That's a perfectly liquid market, already exists. Don't recreate it. It has to be something more interesting and more relevant, potentially much smaller niche as well. That's something you might be able to attract an investor to it.
And we had a token for our company, Propy, that basically just tokenizes all the contracts. And they do cross-border transactions for it through smart contracts. And they've done about 1 or 2 transactions currently, but they're trying to grow that. So.
All right. Well, this panel has done a great job. Obviously, they're making their way through a volatile year. So please give them a warm thanks for their work this afternoon.